The afternoon session will have two parts. The first part is a little bit more structured and I think shorter. And the second half is going to be a sort of a free-for-all, where everybody can ask all the questions that they couldn't, and then either us or the audience itself will try to provide answers. The first very short presentation without slides will be given by Dariusz, whom I asked to briefly summarize the morning's proceedings and also mention if he feels that there is any emerging consensus, any issues that seem to be coming up more often than others, and if there are any issues, questions that he thinks should be discussed in a little bit more detail in the second half of the afternoon. So I would like to ask Dariusz to give us a short summary of what he thinks of the morning's proceedings.
Thank you very much, Csaba. If I had known the task, probably I should have skipped the lunch to prepare. Well, so the morning sessions were very interesting, productive, and it's not very easy to summarize them in 10 minutes, especially having had lunch. But I would say that there were some couple of issues that are either explicitly mentioned or somehow hidden, but still present. So this is my personal take, and please correct me and please comment if you do not agree. So basically the most open questions were relating to the efficiency of the current funded pension pillar in terms of the fees and returns. Returns understood as net of fees, but also returns understood as the product of acquired or determined asset allocation. Something a little bit more hidden was which I think deserves more discussion, is not only the philosophical question about how people make the decisions, but also I think some technical question whether the decisions that the people are now making in the system, whether you could improve that somehow, or for instance, maybe you could limit some of the choices, for instance, the switching between the funds. This is one of the experiences in Poland where the operational costs, I think around 30% were related to paying the marketing agents for doing something which from the society's perspective was not welfare improving. So I would say fees, returns, and member choices. Member choices, again, something probably not clearly linked is the governance. Whether people could have somehow influenced the pension managers also on the way they run the pension funds. And then I think something which has been alluded in one or two presentations is, but it hasn't been posed, at least I haven't noticed that it hasn't been posed as a question, was, is this current market structure in general proper or not? So we have some kind of technical issues, I would say those three that I mentioned. We have some kind of technical / strategic issue, whether the market, maybe we should just, as Estonians, maybe we should just think about another market organization. And then we have the something that I would say policy making issue at the general level, which means power to the people, let them decide, let us make the mandatory system voluntarily, and let's see how it will go. There was some, I think that there is a convergence and divergence. So I've observed some kind of two camps, which is not surprising. Those who believe that these things should be fixed and can be fixed, or at least you should first discuss how to fix those things before moving to some more general level. And those who were saying that it did not work and just forget it and try something else, something new. Somewhere between, when we talk about the issues, was the role of the funded pillar in the whole system, which means the interaction between the funded pillar and the pay-as-you-go pillar. And here again, it depends, I've noticed from the questions and also discussion, it depends how you perceive the funded pillar. Some of you perceive it as an independent animal, and some of you argue that this is part of the social security system, and therefore any changes in this system might create implications in the first pillar. As I mentioned also, I think that this is one of the typical debates that we have in many other countries, how much people should be given protection, how much the state as a regulator should be paternalistic, and how much people should be given the freedom. So it's liberalism versus paternalism. In some theories, there is something between, like paternalistic liberalism, which says you should use defaults, and if those people who want to do by their own, let them do, but majority of people will say, okay, I will take the default. But I think that here is the very clear discourse between let the people do whatever they wish because this is a free country, and the second, let the people help with what they are doing. It's a still free country, but maybe we should somehow as a state give them some protection in their decisions. And then it also has the implications on the micro and macro level. So on one hand, we have a conflict between adequacy of pension level. So some people argue that it might endanger the level of adequacy. And also sustainability in the long run. So if we have the liberalism, maybe we might have a problem somewhere else, but this is something that, of course, I cannot decide. So I would say that from my very personal perspective, one thing that I have been thinking over the lunch, not only about what to choose from the menu, was what is your problem in the pension system? Of course, we've discussed what are your problems. We know that there is a poverty risk increasing. We know that there are many of those technical things. But I would say that if I were the finance minister in Poland, I would really love to have the fiscal situation that you have here. So at least from the experience of those countries that had been doing so-called reforms, some people know it as reversals, there was some kind of, you could agree with that or not, but there was some kind of objective pressure from outside. We need to somehow use the pension assets more productively, at least from the Ministry of Finance point of view. Here I don't see that, so I think that you have, if I may give you this personal remark, you have much more relaxed atmosphere for that, because you can think about it without being pressed. But that was my personal opinion, not the OECD. So I think with that I would conclude and give the...
Thank you very much, and I won't speak much more, but just as an introduction, now we enter a sort of a dream world. Let's assume that we are 10 years away from now, okay? We are in 2029. We are sitting here, and I would like to ask the next speakers to tell us what their vision is, where the Estonian pension system should be in the future. So far, we've been talking about the problems of the past, the problems or issues with current thinking, but you must have a vision of what you think is the best system for Estonia should be. We will have 4 speakers, 4 relatively short presentations. Mr. Indrek Neivelt will start, and I understand he also prepared slides. Then my friend Ardo Hansson will continue. Then Mr. Viisemann, and then I asked Peter Holzer to summarize what I hope is a consensual view of the international community present. And once he says his last words, then hell is supposed to break loose, and you're supposed to ask questions, and then the free question and answer session starts. And in that respect, I would like to encourage, I mean, this setup is very much like a conference. You have the podium and you have the audience, but in the second half of the afternoon, I would really like to encourage all of you not only to ask questions, but if any of you feels that he or she can answer while sitting in the audience, to answer those questions, please do so. The main purpose of this particular event was not just for these internationals to come along and preach the gospel. It was much more to actually help generate internal dialogue discussion among the concerned Estonian parties. So this is the last you heard from me. And, okay, no, actually, you have
Okay, good afternoon. Hey, thanks for inviting me. And as normal situation in Estonia, when we talk about pensions, when nobody is representing customers, pension fund customers. This is very typical when we talk about pensions in the future. So, and I do my best, and I have been in this pension critics business already for 3 years, more than 3 years already. And as you know, I was one of the bank managers who, when everything was started. But okay, about this discussion, what we had, or what we have in a society, I would say that we have 3 levels. We have micro level, macro level, and philosophical level. And very often when we start to talk about about micro, when we skip over to macro, or somebody is on a very, very philosophical, I mean, Csaba is very philosophical, on very philosophical level, somebody is on micro level. And how everything started, the Estonians remember all these nice pictures about nice water, nice warm water, nice sea, and some other pictures what we had. And it was shown already today in the morning about the reality. And I understood from the presentation that was presented as a very big success story, how much these people who joined the second pillar, how much do they earn more. But just to remind you that 79% of people earn less than average salary. 79%. So these people, for these people, it's 30, 50 euros per month, plus in addition. So you put every month you put aside, you invested 2% of your income, and the outcome is 30 to 50 euros per month. This is the reality for most of us. Not for these people who are here, but for ordinary people. And it's really easier to go and to sell apples or flowers next to Eesti Pank or next to Vabaduse väljak to earn with 30 euros or 40 euros. So this is nothing, and people really have collecting and collecting. So what is the outcome now? I'm talking about the micro level. We have the lowest real rates of returns among all OECD countries. We have yields are approximately 2 times lower than in Finland, and the highest fee that you saw in the morning today as well. When we jump over to macro level, and who are losers from the second pillar? First, all these pensioners. In last 17 years, people had lower pensions. Okay, partly it was covered, but not all the time. But we can say like 10, maybe some years even 20% lower pension, thanks to the second pillar. And at the same time, we are talking that we have the highest risk of poverty in EU. Estonian economy, 1% or more of consumption has been taken away from the economy every year. And as we see that for most of the people, second pillar impact is almost zero. And the philosophical level, where Csaba is talking very much about, it's about our party. it's talking about, this is pension funds give a wrong signal to the society. It somehow shows that you can replace children. Money helps every time and everywhere, which is, I think, also a part of today's problems in our society as well, not only in our, but in the rest of Europe as well. We collect money, but we don't have kids. And everybody is thinking, okay, when I have kids, when I'm okay, when I will retire. But it's not enough to have just money, you have to have people as well. And importing money and importing people is not the best solution for today for European economies. And since I have some time, I see it. Just one example, if you want to borrow money from the bank, for example, you have a young family, you have 2 kids, and you will have a third one, and you want to have a bigger flat. You go to the bank manager, and bank manager is saying, sorry, your cost will be higher now. You can't borrow more money. And you have second pillar, it's also 6% of less income, or less income what you can use for your flat for repayments. So you can borrow less money. No, they use 30% of the income. 30% you can use if you borrow money. 5 or 6, instead of 100 square meters, you will have 95, thanks to the second pillar. It is. And what kind of mistakes I have been also thinking, it's not only critics, I have been thinking a lot what went wrong, what kind of mistakes we made. First, I think on macro level, the mistake has been what we did was what we never compared at the beginning. We never compared yields with economical growth or nominal growth. We always compared it with inflation. And the second, maybe the biggest mistake is that ownership and conflict of interest. And fund managers maximized their own profits, and nobody was taking care of customers. Priority number 1 was definitely their shareholders, and some money also for customers as well. And it has been over-regulated. It's over-regulated since a lot of power was taken to the parliament or was set in the law, and it's more, or it's better if it will be like a fund management or some special body who will take care of these investments and who is looking regularly over where our money is invested. And there is no need to give all this power to the parliament, since there are no competence, there is no time in the parliament. It can't be written in the law. And that's why I think that how to make it work, and what is my dream, that first of all it must be voluntarily, there is no mandatory. Second, it must be mutually owned, or in Estonian it's ühistud, or as it is in Sweden, state-owned funds. And with that, we will take away this conflict of interest from that business. And of course, less restrictions on the law. In the law, we need more freedom, where to invest money and how to invest. So that's it from my minutes.
Okay. Hello. Sorry. Sorry, making confusion. It is like leave it. wanted to jump on it. It's when one opponent, it's like then proponent, it's like going forward. But I try to keep it short and to leave more like time for questions. When the question was, or like you put it, how to dream, or where should the system go, then I definitely think that there should be like a more capital in the system. It's like maybe like being like old-fashioned. I think that wealth is created only like through savings, and savings are created only when we consume less and than we earn, and like invest the what is left like productively. So it's when thinking forward, whatever like comes, it is after this fluctuation, it is in current system. I really hope that the new system will help to save and invest more. I guess that's the only way to create like a wealthy nation. So and as being like one of the pension fund managers, like also being accused of not like generating the high returns enough. It is I'm little like maybe stepping back and try to like give also it is like the challenge what we have had. It is like the system was started in 2002. It is and like then it was like really like no money in the system. Like we had like a more our own capital invested into the fund than our clients' money. It is and I hope you believe when I tell that like investing 10 million is very different from investing 100 million like euros. And again, like there is like a new step when you have like a capital pool to invest what is like €500 million. And the possibilities and limitations what you can do are like so much more different. It is if you invest like a small money, you like don't really have like access to private markets. Like an investor with like a private market, I mean like a not public market. Is it like a real estate? Is it like private companies? Is it like something else? You can't go to this market with small money. It's like now our pension system, when it's like getting some kind of maturity and like funds are getting some kind of size, I see at least like there is like a much more like opportunity to put these savings in work productively for our economy, for our society, making life better for everybody. And then I'm not thinking that only like playing in the bond market or like a listed equity market. It's I guess the listed markets, they have like became like a more and more like refinancing markets, not so much like financing markets, like currently like stock markets are like distributing money via dividends, via like buybacks, and only like very little of that goes to the new project. And then when like thinking like forward, dreaming like a longer term, it's I see that more and more capital goes to new project, like creating like a new employment opportunities, helping to make reality new ideas. I guess that's the way to go with it, and what I believe, and that's what my team is doing in LHV currently. And now when looking the current proposal of the reform, I see it's like a really big like a setback about developing capital markets. It's like it will prohibit many projects to become like reality, like smaller companies will not like have access to the capital. We have been like all the time like a really bank-centered markets, and the pension funds can really offer like some kind of not some kind, but like a real opportunity next to the bank for different kind of financing, and because of regulation, I think this alternative way of financing can be even like a cheaper than bank financing and more efficiently like allocated. And just to conclude my short notice, the pension, system is like a complex system, and definitely it's like a long-term system. It's, and I guess whatever like steps will be taken, need to take account these two things. Thank you.
Okay, thank you very much. I don't know if I can use your time you left over to continue, but I won't abuse the privilege anyway. It's very many thanks for inviting me, and also for Eesti Pank and IMF for organizing this conference. And I think the sheer amount of people, the quality of the discussion, who's who in this area has all come together here today to talk about these things, and I think it's terribly useful. I was also encouraged this morning, like Agnieszka's presentation showed that the triangle that I invented 20 years ago is still being used in this pension field. So I don't think it will unfortunately won't get me a Nobel Prize, but it's good at least to know that something that you generated is still used. And on a maybe more somber note, I think the minister this morning, I know he has an important meeting to go to, but I was a bit troubled by his bottom line message, basically saying, you guys, all the experts in the world can sit here and talk about all this stuff, but we've basically decided, and what you say here today will not matter. I find that maybe not so polite, but also a bit troubling in the substance that the value of experts is somehow diminished. But I think basically I will be on the side of people saying that this is a workable system that has functioned reasonably well so far. We all know nobody will say it's been a stellar success in terms of rates of return, but I think the other extreme of saying the money is burning, it's burning, we have to do something quickly, is just pure demagogy. And if we look at the numbers, I think from the Ministry of Finance, they say that the funds have basically beat inflation a bit. No, it hasn't beat wage growth, but it certainly beat inflation. And since that time, a lot of steps have been, I think we've diagnosed the problem. Some of these have been discussed this morning. One related to the lack of competition and the high fees. And I think a lot has been done on that, in that area. If you look at the Ministry of Finance statistics in 2014, the average fee, I think, was 149 basis. It was about 150 basis points. In the beginning of this year, it was down to 96 basis points, so over a one-third reduction already. And I think some of the graphs, I think it was Martin showed this morning, probably since that time we've seen some further reduction in the fees. So we had a problem. The thing is being dealt with. We're in much better shape than we used to. The second issue was about the investment requirements. If you hobble a system with fairly many restrictions, of course it won't perform as well as a system where there were more degrees of freedom. I think the positive side of that is that we haven't had any problems. None of these funds has gone, people haven't lost money because this is a highly regulated system as it should be. So the quid pro quo of having some safety in the system means that maybe we've lived with slightly lower rates of return, and since that time we've loosened up the restrictions. And again, if you look at the Ministry of Finance data, the more the share of equities was in the fund, they were able to generate slightly higher rates of return. So again, I think a lot has been done in that area already. So it is fixable. Why start breaking the system? And the third issue, which we haven't really discussed too much, is this payout phase, which hasn't been a big issue yet. Perhaps in the last session there are some ideas that one can put on the table about how to kind of introduce a little bit more degrees of freedom into that payout phase, where you don't want to just force everybody to take an annuity in a market where annuities are rather difficult to generate. So I think, and if you look actually at the rate of return since the beginning of this year, if I wanted to be very demagogic and say this system is wonderful, I would say since January 1st, the average pension fund in Estonia has generated 7+% rate of return. On an annualized basis, it's almost 10%, so something must be going terribly well. I think it just means that in this business, when you invest, you have good years and bad years. Last year wasn't that good. This year is good on average. It's not that bad, and it will probably get better over time. As far as where we want to end up in the longer term, I think there are really two visions. One is to try to have a reasonable replacement rate, so that beyond just as acting as a social safety net, the system is is generating a kind of a replacement rate for a broad population. I think that's the vision behind this system, that we don't want to go to a bare minimum, but that society in Europe in the 21st century will demand something a bit more, and is doing it without these accumulating reserves is pretty much mathematically impossible. That the choices you face without any reserves are either raising the social security tax rate to a very high level, reducing the benefits to a very low level, having the minimum or the age of going to pension extremely high. Of course, you can always balance the system that way. And the fourth channel is through allowing in-migration to kind of temporarily alleviate the demographic factors. And it just has to be arithmetically true that if you had accumulated some amount of funds in your mandatory system, that those trade-offs would be somewhat more manageable. I think the other vision is the one that is probably more, let's say, the Isamaa vision, which is very ideological, which says that everybody should be responsible, except for a bare minimum, should be responsible for managing their own situation. And again, as I think Csaba Feher mentioned this morning, there are pros and cons of both systems. You can quite legitimately think about a big system, and you can think about a small minimalistic pension system. And I think one can make arguments for both sides, although I think there is an empirical issue that do we really believe at the end of the day that 51% or more of the population will at the end of the day support this minimalist model? And I frankly don't see any evidence of that. Again, living in a European society in the 21st century, and we see that right now today when people are talking, the same people who are supporting this very minimalist view of the future pension system are also saying, I support an exceptional pension increase, because they see in 2019 already that the pensions are getting very low, and I think for good, understandable reasons they say we might want to raise those. So even now, when we're talking about all these things, we cannot sit and watch while pensions go down, and somehow in 20 years nobody will remember any of us or what we said here about how much people should bear responsibility or not responsibility. They will know that there will be more, the electorate will be older than it is today, there will be more pensioners voting, and probably the richer we become, the more demand there will be for a solid pension. I think pension systems may be kind of a feature of high-income countries rather than low-income countries. So the idea that somehow the pension will gradually wither away the richer we become and will remain a social safety net, I find that totally impossible to conceive, even whatever we may think about what's right or what's wrong. And therefore, I think this kind of funded system is the only positive alternative I've seen on the table, which in one way or another tries to get us to a point where we could, in 20 or 30 years, have reasonable replacement rates. And I think in this whole debate, we spent too much time talking about the past and what one horse versus another, who's ahead, whether one pillar is generating higher rates of return or another. But what we really need, as Csaba Feher introduced, a kind of a vision. The people who say that we don't need this second pillar have to put on a table an arithmetic calculation showing what is the replacement rate, what is the tax rate in 20 or 30 years, and I don't think that exists right now. Thank you.
Yes, Csaba, I'm not sure I can give a consensus view or what you required. We pretend. Okay. So this is my view, definitely not the view of the IMF or the OECD or the EBRD or whoever. This is my views, but you can pretend to support, yeah. And I don't think I'm going to say too much new after these discussions. It's rather, as Csaba mentioned, it's sort of a warm-up for the Q&A session, which comes immediately. So I just wanted to return to some of the things we already discussed. And maybe let me start with the maybe this was the statement which struck me most in the whole morning session, when I heard that something like, this is the biggest reform you're having in the last 10, 15 years. I think that was the statement. I'm not seeing a reform here. I'm seeing an idea, and I think, I mean, many of you already mentioned that, you know, for a reform, you should better understand, you know, what's the problem, what are the possible solutions, what are the issues, what are the tax and budget and social and all the implications. And for a reform, I think you would need, you know, some sort of debate, discussion. And as Csaba already mentioned, that's one of the reasons I think why we are here today, to try to help some debate. Now, of course, we've had some, you know, discussions yesterday, today, and to my understanding, no one saw a proposal yet, if I'm correct. The proposal which is supposed to go to Parliament in 2 weeks. And as I heard, even parliamentarians, members of Parliament, said that they didn't see anything. Now, this goes back to the issue which we discussed before, you know, the difference with the Swedish example when they sort of debated it for 10 years. So I think maybe the most important issue which we try to emphasize here is you shouldn't rush. You should take time and discuss these issues. And if we start it this afternoon, fine. And please go on and talk about these things, because it's just not ready, at least as far as we understand. Back to these macro philosophical levels. On the first level, and we discussed it a lot in the morning. On the first level, if some of the big issues are about, you know, performance, fees, returns, then try to answer those questions and try to think about possible options which many of us raised, how you can work on fees, investments, the market structure, the design of the market, how you can improve those, and try to, as I think Csaba started with this in the morning, if you have technical problems, try to answer technical problems with technical solutions and not necessarily policy solutions. And just to go back to what, you know, I mentioned before, or Dariusz mentioned before, you know, what are the low-cost options? Centralized administration, default solutions are very, very important. The life cycle or target date funds are very important, which I think should be in the center of the debate. I'm sorry, but I again have to return, and I think this is another central question of the discussion here about what we think about individual choice. Because you also mentioned you see like two camps, one going for individual choice and the other going for very centralized default options, and then the middle is this libertarian paternalism coming from Taylor. And yes, I don't see this issue discussed here either. You may have discussed it, but it doesn't come through in these policy papers. So it may, I don't know, maybe talking to the people. I mean, you said that, you know, no one represents the pensioners. I don't know who represents the people here. I mean, do you know what the people think about these issues? Or it might be interesting to, you know, okay, let's discuss it after. But in the Q&A session, I mean, because it's important. If you strongly believe that Estonia is a country which is very liberal and yes, individuals do like to make choice and can make good choice, I mean, that's clear. Then that's the way to do it. You guys have to discuss among yourselves. Then And then, and I will finish here. Then, if really the second pillar goes, and if you only have the voluntary system in place, you still have a lot of items which are worth considering, and Csaba started with it in the morning, like what do you do with the money? Is it a good idea to tell people, you know, to spend the money immediately? And then what happens to pensions 20, 30 years down the road? I mean, we've seen presentations about that. So that's a critical issue in the policy recommendation. Another one which doesn't seem critical, but can make life very complicated, and Csaba again also mentioned it in the morning. If you go on having a voluntary second pillar and a voluntary third pillar, with, you know, different regulation and supervision and everything. I mean, think about it. So if second pillar is not mandatory anymore, why don't you just merge the two in the future? We mentioned, a number of us mentioned before this auto-enrollment idea, and I think the auto-enrollment idea is getting more and more popular and more important in the world. So once you only have a voluntary system, and I try to show you some figures about, you know, coverage, think about the auto-enrollment solution, because it can be a sort of a workable compromise between the two. And just to finish, I agree that we've not mentioned a word about pension provision, pension products. It wasn't a part of this workshop, but I think we, as the good consultants, we have ideas. So if you want to raise this in the Q&A session, we can, I think, discuss how to combine second pillar, first pillar, and how to come up with good pension provision. Thank you. And now I don't know what's going to happen.
Since I promised to shut up, I will take half a minute. I will ask Agnieszka to sit here, and please, Ola, please come along. I'll give you a chair here. I would like to ask everybody, when you ask your questions, if you have any idea who you would like that question to be answered by, you don't have to, but if you like Ula or Peter or anybody else to answer, please indicate that. But since I have the microphone, I heard two things over the past 50 minutes that really caught my attention, to put it mildly. One is, I don't see how killing off the second pillar will increase fertility. I don't see why people would make more babies if they don't have a second pillar pension system. I understand that in the course of human history, children, and sorry to use the expression, were capital goods. They were investment goods. That has changed, not yesterday, but 70 years ago. And children have become luxury goods. We like it or not. And actually, they become what the economists call inferior goods, because the more income we have, the less we want to consume of it. I have 3 children, by the way. We don't have to like this state of affairs, but I'm not sure it's that easy to change the situation. The second is that I heard the expression, or I saw on a presentation that maybe non-profit mutuals would be the proper way to go about pension savings. Now, if Hungary is an example of anything, is exactly this, how not to do it. And how not to do is a non-profit way. Because the service, you will have to use services, and those services don't come free of charge. Somebody will charge you for the services provided. So you have to be very careful. It is possible to do it in a non-profit way. The pension scheme is a non-profit legal construct, but the services that make it work are for profit. And when you choose the legal structure, I think the most important guiding principle must be transparency. It is possible, as in the case of Hungary, to set up a notionally non-profit mutual arrangement, which is really damaging to the whole concept of the reform because it reduced transparency and it opened a way for the critiques of the system to say that, guys, this is a totally non-transparent, fraudulent arrangement. Why? Because there was a huge gap between the letter of the law and reality, because it was indeed a for-profit operation. And Peter could tell a whole lot of stories about this. So I think you have to be very careful about the non-profit idea. Yes, indeed, in the first half of the 20th century, there were a whole lot of occupational arrangements that worked as a non-profit, but only the legal construct. Only the legal construct, and the guardians of the legal construct, the trustees, they were operating on a non-profit basis, but the services they contracted were for all for-profit. And now I would like to invite everybody to ask questions.
Yeah, I had a question to you, Indrek. If I understood you correctly, then you said that the pension system gives a false signal to people that it's money rather than kids that you would need to live through your old age. It strikes me a bit as a putting a carriage before the horse, because wouldn't the same argument then apply for the first pillar? Or to put it the other way, should we then consider doing away with the health insurance systems to send people a signal to be healthy?
Okay, thank you. What is my feeling, at least what I can listen or read, when all the Western society, we somehow, what we are doing, we are collecting money. It's like ideology that collect more and more. And here also fund managers are talking that, okay, when we have 5 billions, and when we have 7 billions, and when we have 70 billions, and I don't know how many billions do we have, but it doesn't help. You need to have kids. It's simple as well. And we are talking about always about money and money and money. And somehow forget this, that we are, how many? We have 1.3 millions and decreasing population. And if you read Estonian constitution, what is the goal of Estonian state? But we are talking about money, money, money. How to have more money. Doesn't help. It's not according to the constitution.
I show now stubborn side of myself, and I will repeat the question I asked before, that from our dear foreign visitors here, presenters, that Indrek, that now if our visitors have to go back to home and taken this answer, what we got from our Minister of Finance, that what will happen, that what is this what our visitors have to take back home and say that what problem are we solving here today? What is the problem what we solve today here with the pension reform? Take into account solution what is proposed.
What we are solving today, I don't know. But what we are solving with the pension or changes, I'm not calling it pension reform. I think reform is much, much bigger. It's just a small change that the government or later also parliament is giving freedom. Freedom to people to choose either to be part of a second pillar or not. It's not a reform, sorry. It's a minor change.
May I just have a follow-up question here? Will the experts agree that it is only a small change to give a freedom?
Just a quick response to that. I think the problem, what is it that you are trying to answer? Okay, it's hard to find a proper answer to that, but I think one of our primary concern is that when you allow people to shift to opt out of the second pillar, and then you don't force them to save for their old age, I understand that this is what you're proposing here is a sort of a liberal approach. The problem is that the pensions that Estonians will have by 2050, according to projections, are going to be very low. I mean, it's not a question of you have a bunch of very rich pensioners and you just don't want to force them to save even more. It's just that, as we heard this morning, the original concept and the concept was built around the target level of pensions in the future. That target was incorporating the second pillar. So if you allow people to put less money into their retirement, you can say that, yeah, it's their responsibility. But are they ready? Do they understand the risks? Do you explain to them the risks? Do you tell them that, guys, you have to bear the risk? And do you believe that the government of 2040 will actually be able to tell people that, guys, you made the wrong decision, your problem?
I think that thanks to this discussion, what we have had in last few years in the society, Estonian people will start to collect more money for pensions, but not on the second pillar, but on third pillar or some other instruments. And the reason behind, because people start to understand now that second pillar doesn't help. It is useless. It doesn't help. It's a very small money, and if you want to survive during the pension, you have to save. But not if you are like 18 years old. When you are 40, 45 years old, you start to collect more money, not 2 or 4% per annum from your income, but 20% or 10%. But there are certain different behavior when you have different age.
Indrek, can I ask you this? What is your opinion? How big should be like a pension compared to the last salary? In your idea, what's the good? It's like having this mindset you have.
It depends. What is your salary, of course, but something like 50 to 60% is very reasonable. Yeah. And but again, the question is also that should I retire when I'm 65? Maybe I can easily work when I'm also 70 years old, and system must be more flexible, and I'm sure that when, after 20 years, the system will be much more flexible. And the people will work for longer. And if you talk with today's young people who are like 25, 30 years old, when they don't think about their pensions, they think that they work until the end, basically.
Well, to this question, if it's a large or reform or just a small change, as I've understood the proposal, it means that individuals will be able to choose between the present mandatory second pillar pension, or to put their money in their first in the first pillar. They can not actually opt out. They will choose between the two versions, and then they also have this option to withdraw the money they have funded so far and to consume it. To me, that's a major reform, and it will imply lots of administrative issues and record keeping, and it will cause a dynamic that you should be aware of. It will sort of define what you will be able to do henceforth, and it will have long-term implications, I think.
More on the philosophical front, in order to have 50 to 60% replacement rate, you need to save like a quarter of your income, roughly speaking, because that's how, you know, I mean, if you take the working years and retirement years, roughly speaking, in current conditions, you need to save from the moment you start working 20 to 30% of your wage to have this kind of a replacement rate. That's the actuarial calculation. You can't beat the actuarial. I mean, you can't beat the life expectancy and demography.
But
and
you can retire later.
What later? I mean, 70, 80, yes. Then you can have a higher. But right now, as I could see during the discussion, the retirement age is 65. It will be increased according to the life expectancy, but still you have an option to retire earlier with actuarial adjustment, which actually means that, I mean, some people that are myopic, and recent developments in pension discussion show that, no, it's people are not homo economicus. People think their current incomes and their very near future, and very frequently they make decisions that are not exactly in line with the long-term objective. So if you ask people in their 20s whether they save for their pensions, they will just look at you and say, no, we need to have children, we need to buy an apartment, we need to buy a house, we would like to enjoy our lives and our living. If you ask our kids, Csaba, or my son, who's 18, what do you think about your future pension? He will look in your eyes and say, so Mom, you're completely crazy. You know, I have lots of things in my life. I want to enjoy my life in very different aspects. So I don't know what happens in 20 years' time when I ask my 40-year-old son what you would like to do with your life. So the issue is that we also show an example to the future generations that, you know, an effort to save that we did in our countries when we introduced the pension reform is actually useless. I mean, it doesn't really matter for the future. I mean, that's the lesson that the young generation has from discussions that we have right now. And this young generation probably will not have houses or apartments or flats that they could rent to sustain their living when they are older. So that's a philosophical question. I mean, what kind of a system we need to design for the future? I think that the very first presentation and the very last slide of the very first presentation was about the gig economy and the fact that the labor market is changing very much. People do move from job to job. They move from country to country. And if we as people right now don't show the young people the example that thinking about your retirement is not about liquidating the pension savings, but it's more about how to sustain and build pension savings from the beginning, it will be very difficult for this generation that come to sustain the incomes of our generation that sooner or later will have to have some kind of an income when we retire. And working until a very old age is probably not something that we all think would be a very good solution, not for everybody at least.
Thank you for this very heated discussion. My name is Tea Danilov from the Estonian Foresight Center. I would like to touch upon a little bit different angle that I haven't heard today. What about the sustainability of funded pensions, not only in Estonia, but also worldwide, given the interest rates environment? Throughout these 17 years that we have been practicing the funded system, the second pillar and the third pillar, we have seen dramatic falls in the interest environments, in the interests rates and returns around the world, and especially in safer asset categories. And we know that in Europe, quite a bulk of it are actually yielding negative returns. So, and there are voices of different experts saying that this situation may persist for several decades, 1 or 2 decades still ahead. So, in what perspective this puts the funded pensions, the sustainability of funded pensions as such? Thank you.
First of all, the sustainability is not a question. Typically, these are defined contribution pensions, so the traditional question of would they run an underfunding problem that doesn't persist, but doesn't exist. But I understand your question. Your question is, are they viable? It's more like, it's a question of viability. I think one of the main benefits of having a defined contribution, actually a funded pension arrangement, is that you have reserves that can be invested, and that they can be invested not only in your own home country, they can not only be invested in your peer group, but they can be geographically diversified. They can be directed towards market that might be slightly more risky, but that might promise a higher rate of return. And this possibility of geographical diversification is exactly what is, I think, the one remaining selling point of having funded arrangements, is that when you are in a pay-as-you-go traditional defined benefit social security system, you, the citizen, you are exposed to what they call a single issuer risk. You are exposed to the risk generated by your own home country's government. If you are in a funded scheme, at least on one side of the balance sheet, you can diversify some of that risk. And the risks that can be diversified include the rate of return differentials. And now Peter will say much nicer things about it.
Let me try to give you the answer, okay, after Csaba's trial. So unfortunately, this is much more difficult because, and I agree. I mean, I didn't have time, but on one of my slides, this was exactly the point, that the investment environment in the next 10, 15 years will be way more complicated than what we've had in the last 20 years. And I agree that there's no guarantee that these, even if it's defined contribution, that these funds will be able to have a nice risk-return profile as we've had so far. You know, I come from the investment management industry. That was my original background, and we always had these stories, you know, diversification and all that. It's going to be completely different. But then let's start to compare this proposal to first, how would individuals invest then? I mean, you don't have the DC second pillar pension funds, and then you tell your average citizen, you know, go out and save. I mean, do you think that their solution, their approach will be more, quote unquote, professional than what the industry is doing today? I don't think. It may not be worse, but I don't think it's going to be better. So if you compare today's situation to a free world, I'm not sure the individuals are better off, because they, again, you know, they buy German bonds at negative interest rates. I mean, what do they do? And what's even more complicated, I mean, think about the state. Think about the whole, you know, pay-as-you-go system. If this system stays with us for the long time, and we go into a world with negative interest rates, with modern monetary theory and all these, you know, I don't know what's that, but that sounds very interesting. Very easily, it may lead into, you know, an inflationary period, 5, 10, 15 years down the road. And then start thinking about, you know, what are the options of the average Estonian citizen in second pillar, as an individual investor, and as a taxpayer or a member of, or a future beneficiary of the Social Security Fund. So I completely agree with your point. I'm just trying to say that it's not only the second pillar pension funds which will suffer from this, but all the other options. May I move the audience a bit? Because they are, you know, stand up and sing and dance. Yeah, because please try to tell me, okay, let's have a thought experiment, and let's think about, you know, you don't have the second pillar, you only have the first pillar. Tell me, please, the number, okay? The euro number an average pensioner would need in savings at the age of 65 so as to have a proper pension level. You understand the question? In euro terms. Okay. So my question is, I retire at the age of 65. I only have my first pillar pensions. Do I need like 20,000, 50,000, 100,000 euros extra savings to become a proper pensioner? What's your 6-digit number starts at 100,000. So, and any other bid? 300. Say 65. Okay. 20 years. Let's say in 20 years you retire 1 billion. Okay, that's a good number. I like that. Any other ideas? Okay, in real, yeah, but we don't have inflation today. So, So it's like 100,000, 200,000, something like that. It's fine, okay. Now, how many Estonians today, or even households today, do you think would have a path to that savings accumulation? Huh? That's a very good question, without real estate first. So the percentage of Estonians who are at least close to that figure, or have a chance to get close to that figure? 15%? So that's 1%. Okay. Okay, 1%, 5%. Right. That may be right, because in the Hungarian case it's similar. It's like around 4 or 5% and not more. With real estate, I don't know. That's difficult. So I'm just trying to say that when you think about these replacement rates and we leave everyone, free and they start to save, what are the challenges? What are the challenges? And that's what I referred to before. When you think about this reform and you start debating the issue, think about this. If you want people to save and if you want them to become proper pensioners, I mean, what sort of institutions you should try to set up? Because otherwise it's just not going to happen. Okay?
Thank you. I'll just comment on some of the issues there were. So first about the people question. So there have been several polls in Estonia, and regardless of the party they're choosing, the majority of all the people support the voluntarity of second pillar. Then the question about money versus children. Maybe to grasp the concept, and last year we had the third child support system installed here, and after that the birth rate of third children in families went up 30%, while the second and first child birth rates stayed the same. So, okay, money doesn't make you get children, but it is a limiting factor. So if you have 7 children, it's quite hard to support them without public support. You either have this possibility to take the kids out of practices to have another child, or have a good life for all of them. And my question would be directed to Mr. Hansson. So based on the calculations, okay, let's start here with a question from Luminor, that the government has to prove that that the ongoing reform is a good thing. Well, I counter that argument that actually all the experts here have to prove to the common citizen that what you're doing with my tax money is good, and better of that, what I would do it with on my own time. So, and if you look at, again, the inbound payments to the second pillar and the outbound, then the balance is projected to come at 2056. That's 37 years from now, when the cash flow might become positive. So if you put that into pensions, at the moment, the average pension is 450 euros here. So if you demolish basically the second pillar, and all of the tax burden would be the same, the loan budget would be the same. So instead of 450 euro pensions, we would have 570 or so. And what we lose because of that is 2060, when I'm supposed to go to my retirement at the age of 70. Then when the average pension is 200 and 300 euros, then it might be 80 euros less, so 2,220. So we're losing 120 euros today, so maybe would get, thanks to the second pillar system, 80 euros in 40 years. That does not make sense, even if you don't take into account money we're giving away from our, basically our own economy. How our economy would grow faster if the money would be left to the people and not regarding even the number of children we might have more. Thank you.
Okay, I don't know. Was there a question there? I don't. Yeah, there was a lot of. I can't follow all the kind of calculations back and forth. But I think if we start from this last point about money leaving the country, I will remind there is the biggest fund in the world is the Norwegian oil fund, which is about $1 trillion US, which is about 400 times bigger than the Estonian second pillars combined. And I think Norwegians are pretty, and all of that money, 100% is invested abroad. And I think the logic is that, again, as Csaba Feher was saying, that if you diversify your risks, you have a pillar where your fortune is tied to the Estonian economy, and you have another pillar where you're tied to the world economy, and sometimes one does better and sometimes another does better. You're in much better shape. And if you kill off that pillar, you just take all of that money and spend it now, then any shock that hits the economy in the future leaves you much worse placed. And I think Norwegians are smart people and realize that because their future there may not be quite as bright as the present, it's time to use some of that money. So I think, of course, it's possible to do an intergenerational transfer and spend some of this money right now. You would have higher pensions in the present, but that's certainly at a cost relative to the future. And if you go into no, it's not debatable because we have 4 billion accumulated now, and if let's say the minister said 1/3 of that would be taken out, we have at least 1.5 billion less money in our state pension system than we do have now, which means those trade-offs in the future are going to be much more difficult. And
future generations pay more money into the system than we are getting back at the same time. Then the pensions will be lower indefinitely because the Minister of Finance calculations are based on the European Commission calculations that basically say that the second pillar return rate will be the same as long-term interest rates in use. And at the same time, they say that the long-term interest rates will remain the same for 60 years, although economic growth will get slower.
okay, maybe I think this is not helpful for the whole audience. That if we kind of say your forecast against somebody else's, maybe it's some a conversation that's better to have offline. But I still don't see how having money in the bank, having accumulated something in the future, is going to necessarily make the future worse. Right now we have people, I mean, the deposits in Estonian banks are growing about 10% a year when banks are paying 0. So basically everybody who's holding a bank deposit knows ex ante that they're losing money, but they still, and I'm putting money into the bank all the time on those terms, but because, as was mentioned earlier, that's the best, it's one of it. You look at all the options on the table, the option of not saving and just spending everything right now doesn't seem very smart. I know it creates some headwinds for saving in the short run, but at the end of the day, if you want to do the math and have those reasonable replacement rates, even if you're losing a bit of money, you're going to make those choices. And if you want to use a very kind of a rural example, if you planted your potatoes in the springtime and you went and harvested your potatoes in the fall time, do you say, do I put them in the basement for the winter or not, or do I just consume them now? And then you look at the rate of return and say, some of them are going to rot, some of them are going to get moldy. I mean, the rate of return on putting them in the basement is negative. Besides that, they start tasting not as good as they would before. What a lousy deal. Let's consume all of the potatoes right now. Of course, you're smart enough to know that you're going to have to do this. So it's pretty common sense that you, even when you get bad rates of return, it still might make sense to save. Of course, we'd like to get better rates of return.
So along this line, I would like to come back to the fees component. When Bank of Norway invests it's called the pension fund foreign, then they basically use index funds, and there is competition, and it's a few basis points. If you want Standard & Poor's 500, it's a few basis points. We have an extremely efficient pension center, perhaps in English, which should be able to administer this to involve some US funds, we should be able to get our second pillar pension at 0.1%. And right now, the average fee is 1%. There is, and I mean, we do know that there is no outlook to higher returns in the market. So the way we can get higher net returns would be to institute systems so we can get the fees down, and the target should be 0.1%, not 1%.
My turn? Yes, I just sort of listening the debate. I think there are lots of finance issues, which is appropriate in this hall. I don't disagree at all. I think there was a fair and very legitimate question. So what it all means for a future and today's retiree. All these changes what are planned. And I must say that I really feel sorry how ill-prepared this reform proposal has been. How little there is actually debate or disclosure. I mean, this room here is well above the average in terms of knowledge. How many of us were actually able to put the ballpark number, how much you have to save in your lifetime, in your working lifetime, in order to be prepared for a pension, was really, really humble, modest number, and we even didn't agree. So I think people deserve much better, and I think people precisely deserve a list of the price tag on different options, like Peter as well mentioned. So if we move this parameter, what it means for my retirement, and I very much hope that this debate will happen in a parliament with a proper impact assessment from the government, with price tags on different options, and then we can agree and disagree whether we should increase taxes, whether we should reduce or increase the retirement age. These are all legitimate political choices. But what is happening now is honestly ill-prepared adventure. And I'm really sorry for my country, and I'm really sorry for our guests who have to listen this ill-prepared story.
Thank you. Madis, Ministry of Finance. You said that we can also give answers, not only questions, so I have an answer, I think, to a question which has been asked here several times: what is the problem which the government is trying to solve with the reform? And I think the answer is in a book published in 1962, translated into Estonian in 1991, I think. And the book is Milton Friedman's Capitalism and Freedom, which has been the Bible of, I think, more than one political party in Estonia, at least during the 90s. And Milton Friedman writes there that the state in a free, liberal society, the state should not take away the freedom to make mistakes from a responsible adult citizen. And I think this is the main problem which this reform may solve, if you consider this a problem. Thank you.
Can I have a question as a follow-up? So, as the next step, are you going also to make the health insurance voluntary in your country?
May I clarify one thing that also Ole, for instance, touched upon? In this change, what is planned and put up now one has to say that whether it's ending up as a reform by a big reform by some standards, or actually reinforcing some of the present aims, it depends very much on the outcome, because it's designed now so that either you stay with the second pillar, you actually opt for the first pillar, or you get out of it, out of both, at least to some extent. And in a way, indeed, if it happens to be that you, if most people, if there is big movement from the second pillar to the first pillar, one way or another, then it is in that sense big reform that it reverses the idea that you privatize some of the so-called first pillar future pay-as-you-go outcomes or costs. What is okay decision in terms of if you think at the end of the day that the first pillar is better way to handle at least this part of the pension rights collection and payment. If most people actually remain in the second pillar and somebody opt in, then you could actually say that the outcome is even reinforcing the present system, and even more acute is the question what to do with the development goals of the second pillars, and in this present stage one has to say that pension part is actually missing altogether, so we have to come back to there. And the third outcome could be that the very big chunk of people actually opt out and indeed, how to say, opt out from the pension system altogether by, in a way, spending their rights. And that's probably the biggest potential big change if one kind of puts these options in the fold. But indeed, we don't actually know what's the outcome because it depends on the choices. I had actually one question, if I can, to change a bit topic still. This no more technical side. These pension system arrangements, that second pillar arrangements that were referred to, for instance, Sweden, etc., where you basically create the market intermediator by this your system, basically tearing apart the demand and supply side in a way, and doing this the middle ground work. It's in a way logical, and it's understandable what kind of problem you might want to cure in the market. But what puzzles me in this is that in principle with the second pillar we hope that we can in a way push market to work, but it doesn't work there. But is there any hope that the capital market in general works? So does this example of one part of the capital market actually give us some hints that we should have much bigger reform in the capital market, and then broaden the approach of the pension system to the other parts of the capital markets as well? Or is it still such a special part of capital markets that you cannot broaden the experience of, let's say, your system into the broader capital market functioning?
The most difficult questions always fall on EBRD lap. I think if I would be government and ask the question, would you like to send large parts of your population to operate their long-term life savings in the competitive capital market and invest them individually then I would not recommend anybody to do it. If I would be forced, given the coalition nature of the government, to do it and to choose a time for it, then I wouldn't choose a time when asset prices are at their highest, both on the securities market, real estate, and the interest rates are at their lowest, so the time wouldn't be now.
But I come back now to Indrek, who actually, I think, if you combine what Indrek said and Agnieszka, for instance, they both actually claim that at the end of the day we need even higher savings rates that we are talking about today in Estonia, 22%, in order to preserve long-term outcomes. So if we talk about that you should have this intervention for 2%, in principle we're talking that you should have the intervention also for at least 8, 9, 10%. And if you don't need intervention for 8, 9, 10%, then why actually you need it to 2%? That's my dilemma in this discussion.
I think one of the interesting questions that perhaps does get raised here at least is that in fact, if anything, then the second pillar is probably too small. We should make it bigger, save more.
Just maybe one comment to our guests that these people in this room are not representative. This is 80% of Estonian pension mafia is in this room who just protect their own interest. Yeah? Most of these people. That's why. Because if you talk with ordinary people and if they see their account statement, they understand that something is wrong with the second pillar. Everybody understands something is wrong. And you have to do something. And I think that I'm not representing government here, but I think that government made very easy decision just to give this responsibility away from the government. So it's very logical as well. Because if you look also into the future, what will happen in this interest rate environment, how difficult it is to invest, just to say to people, you are free. You do whatever you want to do. So you save or not save, but you are free.
I understand. I think everybody agrees, and all the presenters said so, that there are problems with the second pillar. I think what at least our consensus seems to be is that we would like to encourage the government to try to cure the patient before killing it, or perhaps not even consider killing it.
Yeah, it's like Gorbachev said that communist was right. The communist system is very good, that you have to reform it a little bit. But what came out that you have to demolish one and start a new system.
Well, you said that the private pension mafia, I mean, on one hand you say this is the private pension mafia, all these bad kind of capitalist hawks, and then you say that it all harkens back to the communist era. It's kind of, I don't know, maybe it's the same characters. Just a sec. There was this question about, Dariusz asked kind of provocatively about health insurance and making health insurance voluntary. I think there is a little element here that we have to remember. Okay, we say that, third-party liability is important because of the externalities. Health insurance is important because of the externalities. Okay, we want to have vaccination, and then we suddenly think that, but pension savings for old age, that's different because there are no externalities. There are no externalities if you don't save enough. But that's not true. When you say that let's give people more freedom to take on risk and then live with the consequences, that approach suggests that there are no externalities. There is no broader social externalities with insufficient savings. That's wrong. If pensions are too low, the Treasury will have to cough up the money to supplement those pensions, and those pensions will be financed by those taxpayers who never had a say 20 or 30 years before about the shape of the pension system. So do not think that the shape of the pension system is without externalities.
But sorry, comparison with health insurance is not relevant here because we are not pushing people to save for a future. We are not saying that you will have a cancer after 20 years, but you have to save money today in order to be okay after 20 years. It's vice versa. What this current pay-as-you-go system says that society helps you We have your society who helps you after 20 years, after 30 years, and so on. There is no need to worry. We are not collecting money for cleaning streets from snow, for example. No, we taxpayers after 20 or 30 years, we must pay as much taxes, but the streets must be clean.
Well, I think, I mean, first, there's a lot of economic literature after Milton Friedman, and especially the recent Nobel laureate Richard Taylor, which has plenty of interesting books on how people behave in short term and long term, and I think it's worth reading and considering. I think we need to go back to the population pyramid that we saw. And that's an important issue, that we need to remember that the society structure, the population structure in the future will be different than it is right now. So we will have many more older people that will require consumption that comes from some income. So putting the other way around, if we look at the future in the 40, 50 years' time, and the share of the elderly that require consumption financing, the question is how to ensure that their consumption is financed from somewhere, and what are the sources of consumption of the future elderly people. And then try to think how to design mechanisms that allow to deliver decent consumption level to much many elderly people in the future, and that should be the starting point for the discussion of how the pension system should look like today, and what are the choices that the policymakers are making today in order to ensure that in 40 years' time, old people have sources of income to finance their consumption needs. And once we solve this puzzle, then let's think how to change the pension system. So pension reform is not about what happens right now. It is what happens with the people in 40 years' time when there's a huge risk of financing consumption for the rising number of people at older ages.
Yeah, and it means that after some 50 years, we will be three groups of people. One is state employees, when pensioners, and third group is these who are servicing pensioners. This is the society what we will have. So I don't think that it works, what I'm saying. Anyway, there will be different solutions, and this demographic situation, what we can forecast today, it doesn't work.
I guess it's like it's just.
Okay.
Do you remember?
Thank you. Today has been extremely interesting. And if you don't mind, I will step out of my role as an expert that came here today into the role of an ordinary person. The first comment I want to do is that it seems to me that we need to have, in addition to an organization representing future retirees, we need an organization for representing fertile women, because it seems to me that the current voices are not really getting the situation. If you want to increase the birth rate, look at the statistics related to Estonian children. There are far bigger problems than the structure of a retirement policy. Despite having second pillar, I have managed to give birth to 2 children, and I'm here as an ordinary person to prevent a question from 20 years in the future. In 20 years, my children will enter the employment market. Considering, or assuming that the proposal of the retirement policy change will go through, a considerable amount of people will have taken out their savings in the next few years and consumed them. In 20 years, they will have retired. They will have certain expectations towards the state to provide funding for the retirement. My children will be the ones to pay the taxes for that. So the question now is that, do we have an option to agree who will be the responsible for this change, or can we make a legally binding, I don't know, form for these people who step out of the retirement system to not ask for additional thing? what would you say to my children if they ask, why didn't these people save? Thank you.
I think at first they will ask anyway. Don't think that if they have money or they have this 5,000 or 10,000 euros on their pension account, they will ask anyway more money. That is first. And secondly, retirement age will be much higher than it's today, after 20 or 30 years. It will be 70, 72, 73, maybe 75 years. And that will be the solution. And of course, there will be a lot of new people from different countries. But we don't know what will happen after 20 years, that is for sure. But, and what I'm saying that is saving money doesn't help. It doesn't help at all. It's just minor issue what we are talking about.
Just a brief story from Poland. The previous government dismantled the pension system and the funded saving. The current government reduced retirement age. So right now, we have 60 years for women, 65 years for men. Everybody is happy about it. And of course, we will choose the same government rule for another 4 years. Then the question is that cleaning up the problems in the pension system, in the education system, in the healthcare system that exist means that many young people in Poland will actually think exactly the same. Why we are to pay the bill, just as the kids right now are protesting because they see changes in the climate and in the global warming. What kind of a world we leave for our kids if we say, we don't worry, we just shut our eyes and go to the future? And you will have a problem. We will not have a problem because we will not be on this world in 40 or 50 years' time.
If I can, it's like, it's just Indrek enlightened me. It's like this Indrek and Viisemann, it seems to be this kind of very sneaky and not very straightforward people. It's explaining that making the second pillar like free and like actually like intention is comes out, it's like abolishing it, it's like terminating it. And now when telling that let's make the working age also like a longer, it seems that like this kind of sneaky way to abolishing also the first pillar, like if everybody like works till the like till the die. So it's like no need for the pensions, what I hear from you. It's okay. And but at the same time, like I heard you like before, like confirming that you like to have like a replacement rate around like a 50 and 60%. Doesn't it like contradict that?
I think I will work till then, but of course.
I think one of these issues, it all comes down to having a feasible plan for getting from one equilibrium to the other. And somehow I don't see this. There has to be a change. People now who go to, you have elections, and every party says, I promise more pensions, I promise more pensions. It's already very popular. And then we have to think that in 40 years, when the demographic situation is much worse, people will somehow start changing and will say, oh, actually, I don't want this. The old elderly people will say, I actually don't want these more pensions because I understand that the state is in a difficult position, so I even won't support the parties that promise more pensions. It's somehow, I don't see this mindset changing. People are people, and they will, in 40 years, there will be even more pressure.
But Ardo, why do you think that our fathers and mothers, they are reasonable? They were not demanding from parties that they should hire their pensions. And we, when we will be 70 or 80 years old, we will be crazy people and start to destroy the economy here, all these working places and everything. But we will be this generation who will be crazy.
Indrek, because you are suffering, maybe not you, it is, but if you don't have like eat and you don't have like money to pay for your heating bill, it is then maybe you will go and vote. And it was yesterday, I was just reading, it wasn't like about the second pillar or so, it's like a different article about economy. And it was like, I remember like a sentence telling like when when people go and vote for a pensions and political parties offering like just higher pensions, it's not anymore like election, it's auction.
This workshop has been quite remarkable so far. No, not for the reason you think, because we managed to keep to the original agenda fairly well, except that now it's 15 minutes past our scheduled closing time, and I was informed during the organizational discussions that our friends from the media have all sorts of deadlines to observe, and that's why we should finish not much later than 3 o'clock. So I would like to do just one thing. I would like to ask our panelists to say one short, relatively short sentence, kind of just a closing sentence, each of you, and then I ask our same two gentlemen who opened up the workshop to close it with a few words of wisdom and good wishes. Who would like to start? Let's, Ulla, I see that you are volunteering.
Thank you. It's difficult, I think, to say something useful and valuable. The minister was not so encouraging on that. I would still sort of think that the offer that the Estonian state makes towards its citizens now will be quite complex to value for individuals. Should I cash in on my contributions, pay the 20%, and should I then continue within the funded part, start anew to continue contribute there, or should I contribute in the mandatory system? I think it's sort of similarly evil as Sweden did towards its citizens to choose between 800 funds. People do not appreciate that offer, and I am quite doubtful that Estonians will appreciate this freedom and this offer that they will get. And you risk making everyone annoyed, because some people will figure out or think that they did the wrong choice. Maybe they did, maybe they didn't, but they will still be annoyed. And this will be equally distributed among those who did really good choices, because it will be so difficult to evaluate. So to me, this is something that at least those who proposes it should have the self-confidence to let the normal legislative procedure apply, and to have comments and have some reflections on that proposal. I think it's very discouraging to see that Estonian politics works as bad as Swedish politics does in many aspects.
In the proper legislative procedure, there is something that is called impact assessment. So I think it would be good if there was a consensus on what is the purpose of the change that is proposed, and proper impact assessment, including what happens to the financial market, to the labor market, to the current and the future generations. And once all it is done, then the decision should be made. So I would encourage you to do the impact assessment before making decisions. That's a much better way of doing things than making decisions and then thinking what went wrong. We are on that side in Poland, on making the bad decisions and then thinking what went wrong. That's not a good idea.
Thank you. Now, 3 things. Please slow down. Second is please treat expert knowledge seriously. And third is please consult and try to build some consensus. Thank you.
Well, I have nothing really to add. Probably you can do both. One thing is to think about the system, what kind of system you would like to have in the future, but in the meantime, think what you can fix with the system that you have at the moment, and then you can choose, but probably it's better to be a little bit slower than hurry. Thank you.
Thank you. I just have a remark. I cannot help the irony of hearing the name of Milton Friedman in this case. I mean, and how history goes, you know, round and round. And remember, guys, in the 1970s, when the Chicago boys went to Chile, and the Chicago boys, in the name of, you know, liberal markets and freedom, and then let's privatize social security and all that, set up the system which now you want to dismantle in the name of Milton Friedman. I mean, this is so funny. Thank you.
I think that we have to trust more people at this first, and second, maybe to the government or Ministry of Finance, we should explain more and show examples from different age and income groups. What is reasonable, what is not reasonable, just to have, like, I don't know, 5 to 6, 7, 8 different groups to explain what is the best solution for them. If you have a consumer finance or consumer loan, if you don't have, repay or not to repay, and just talk with people.
I want to say that pension systems are like a complicated system, and it really takes like a long time to build them and make them effective. And my current feeling is that current government don't know what they are like destroying, and they don't know what they offer instead.
Thank you for this very passionate debate. I think we have had really here international experts, and we have cross-country example, and also within Estonia we have heard experts talking about this subject, and as Ardo said, I think there is many ideas now on the table that could be served to build some consensus going forward. But since we don't have time, I try to write down what I wanted to say as closing remark. I will not come back to the technicality of the reform, well covered by our expert, but my closing remark will be geared toward the possible macroeconomic consequences of the reform. First, let me allude to the motivation of the reform. As we understand, the reform is motivated from an ideological standpoint. I heard also about the low return of the Pillar 2. There are also some institutional issues and operational cost. But despite this motivation, the reform would still take away some minimum rate of return for individuals who belong to a defined contribution scheme. This is the first point. The second point, though the second pillar scheme is in principle a private scheme, there are clear implications for the budget. Furthermore, some of the people who opt out could require in the future public assistance because saving in the first pillar may not be enough. The third point I would like to stress is the burden on future generations. Given Estonia's aging population, the reform in the form we know now would increase the burden on future generations even more by letting people reduce their pension saving. Given these three considerations, we believe that the reform should factor in the following issues. The fiscal risk first. The reform, if implemented, could generate both short-term, long-term fiscal risks, reduce benefit for future pensioners, and possibly downside the second pillar. Another factor that we should take into account, according to the minister, the finance minister, the reform will be in full swing in 2021. We don't know exactly what is going to be the current macroeconomic framework at that time, although now we are forecasting that in 2021 the economy will still do well, and actual growth could be well above potential. But if this happens, cashing out safe balances could also boost consumption. And fiscal revenue and even economic growth in the short term, of course. But this also can reduce pension entitlement in the long run. We have also to be cognizant of that. At the individual level now, the reform should factor in replacing the second pillar scheme with personal pension account could expose individuals to investment risk, including higher costs, therefore imposing welfare losses. Given all this consideration and the macro criticality of the pension system, as we suggested during our staff visit, I think the authorities should proceed cautiously and build a consensus. And we believe that the workshop of today is a big first step. Thank you.
Thank you, Cheikh, and thank you, Csaba. I agree that it was an excellent workshop. In fact, if we announce to have technical discussions on macroeconomic issues, then normally we don't get such an attendance and so much discussion from the local audience. So it shows that it is an important topic for us. Now, let me also use the privilege of the organizer and the fact that I have the microphone to sum up some of the key points that I took from the discussions today. First of all, it may have been a bit discouraging in the morning to hear the ministers say that much of the plans have been finalized by the government already. I actually don't think it's quite that far yet. In fact, we had a meeting with the government 2 weeks ago where one of the ministers asked that how can you at the central bank do an impact analysis, as even they haven't really figured out many of the details yet. So I think actually there is still room to have a debate, and of course the parliament is only yet to see a draft law that really should include all the specifics. And even if the government has really made up their mind, then we heard, I think today, that we may be looking for future problems here that it may not be a bad idea to discuss already. So I think in any case it was a helpful discussion. I think it's a point you, Csaba, made, that it's important to have an open and honest discussion about what kind of a pension system we really want to have in Estonia. What would the changes that have been tabled now, what would they mean for the average pensions going forward? But not only we shouldn't be concerned about the average pensions, but also for pensions for lower income people who might decide to cash out their pension savings, say 5 years before they reach retirement age. I think we need to be careful, that's one of the lessons from today, with fundamental changes in the pension systems, given how difficult it would be to build up a new funded scheme once you have reversed and demolished an existing pension savings system. This is the lesson we heard from Poland, basically having done that, and now having realized that indeed you need additional savings by the population, and we see that it's very difficult to go back. It's also important to remember that we don't really have an immediate problem that calls for very quick solutions, so there should be enough time to discuss what is the best way to proceed. we also learned that it's not only the experience of Estonia that it is difficult to make many people save enough voluntarily, so there might be benefits in mandatory schemes. And I think from the minister's speech this morning, to me it was a very good news indeed that they at the government seem to be thinking about how to still make the second pillar more attractive to people who decide to keep saving. And what the minister said about there being zero income tax on the pension savings if one waits until the retirement and only starts using the proceeds from the second pillar after that. I think that that was an important message from this morning. What I took from the experts from the Ministry of Finance and the Ministry of Social Affairs is that if you go and change the second pillar, you almost inevitably have to think also about the first and the third. I think it would be best to look at it all together and have one set of changes. And finally, I think we also heard some helpful lessons from Sweden in terms of how to manage a pension savings scheme as efficiently as possible and with lower costs. So I think there are many things we can use from the debate we had today. I would like to thank again the IMF for helping organize the workshop, and of course all the panelists and discussants, and all of you who took the time to be here today. So thank you.